So you're here at the Naked Trading webinar. Walter Peters here, full-time trader, wrote the book Naked Forex. You may have read it, I don't know. And today we're going to talk about some things that ain't in that book. We're going to talk about trading some breakouts. How about them apples? And we're going to talk about at least three. I'm trying to squeeze in some more if we have time. And if you guys have any questions about the live markets, we can definitely look at them from a naked point of view. Okay? So, hey, Albert, great to have you here, folks. Thanks so much for your time. Really appreciate it. I know we get, busy lives and stuff like that, even if we are locked in all day. And it's great that you're able to spend time here. And thanks to all of you watching the recording, too. Thanks for spending time here. So let's talk about some naked breakouts. So I'll see if I can... Actually, here's one right here. I didn't actually plan this, but we've got one on the CAD Swiss 4-hour chart. So I'm going to get, like I said, I'm going to give you at least 3, maybe 4, 5, 6. I don't know how far we can go, but we'll try that. Okay. And this is one actually that was in the book. This is what's called the last kiss. Now, the way that this works is I like to find a box, a consolidation box, right? And we're going to pretend like we don't know what happened here, right? So we're going to do something along the lines of, it's kind of hard. It's kind of hard because of the big fall here, so it tightens up this box. But basically, one of the keys of drawing a consolidation box is that you have at least 2 touches on both sides. We got that. Touch 1. You may count that as another touch there, or you lump these candles together, but you clearly have another one over here. And then here on the bottom side of the box, you got 1, 2, 3, 4, 5, 6. I mean, depending on how you count it, you got plenty. And so the way this works is you got to have 2 touches on the upside and on the downside to establish the box. And you don't really want to see any candles going from one edge of the box to the other. Now, that's where this one's a little bit tricky because we do have this candle here, which almost goes the other side, but we don't really have any candles that completely span from one edge of the box to the other. I suppose I would, if pressured, I'd probably rather have a 2-hour CAD Swiss chart and probably would rather trade that. In fact, we can do that if you'd like. We can get a CAD Swiss up here and we can trade. So this is a 1-hour chart, and what I'm gonna do is I'm gonna make this a 2-hour feeder chart. And then what that means is that we will now have a 2-hour CAD Swiss chart available. Whoops. Like this. My fancy schmancy conversion indicator thingamajig. There it is. And let's see if this looks any better with the 2-hour template. There it is. Boom. Okay. So where was that bad boy anyway? I think it was right here, wasn't it? Was it right there? I don't know. I can't find it. I think it was right there. Let's go back to the 4-hour. I'm not sure that I can find it, which is embarrassing. But anyway, we'll go with the 4-hour. It's a little bit easier on the eyes, I think, with the white background. At least for me, it is. It is late over here in Australia. All right, so the way that I like to do this is I wait for the market to break out of the box, and then we want the confirmed breakout, which is the last kiss. And it's a bearish candle on the downside or a bullish candle on the upside. You don't really want to close back inside the box. That's the key. It doesn't, and so there's 2 ways to get out of a losing trade here. Way number 1 is that you get in a trade, you sell. So the sell stop is placed below this candle right here. The stop loss is placed in the middle of the box. Now, the middle of the box is kind of arbitrary. I like to find a support and resistance area. So I've got resistance, 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 and support. And so I'm going to use this as my emergency stop, which is 69.26, right? That's what I would use on that box. I didn't take a trade on this box, but had I taken one, that's what I would have done. Now, this right here is my last kiss entry candle. I put my sell stop down here, So a few pips below the low of that bearish candle, and I go, okay, I got 41 pips of risk. Let's see how this is going to go. And you can see overall it offered about 82. So about 2R max available on that trade before it came back up. So maybe a trailing exit you could have used with the 3-bar exit. Is everyone familiar with that? That was in the book. With the 3-bar exit, you can see it never actually came back up and closed in the box, and it didn't threaten the emergency stop either. So if you have a losing trade and it closes in the box, like you sell here, and then let's say this candle came up here and closed in here, that would be a reason to get out. So whatever time frame I'm using to get in the trade, if I see a candle close clearly inside the box, not right on the edge, like really inside the box, I close it. And if I'm sleeping, or if it gaps up or totally rockets up to the moon, the emergency stop is up there. But most of the time, 80%, 75% of the time, you're not going to get stopped out in the emergency stop. Most of the time, you're going to get stopped out on that exit rule, right? So anyway, using the 3-bar exit here, we're lower, 1, 2, 3. We'd have a stop loss here. Actually, I like to use it once it's in profit. But anyway, so you're in profit here, here, here. So it'll be right here. No, it would have been this candle actually. Then it moves to this candle, and it stays there. And then it moves to this candle. Then it moves to this candle. Then it moves to this candle. So it's going to get stopped out here basically. So it's going to get stopped out on the 3-bar exit right there. Rather. So this is roughly, it's about 1-to-1. Close to 1-to-1. Maybe 0.9, something like that on the trailing exit. Okay, so that's the last kit. So that's thing number 1. Remember, multiple touches, at least 2 touches on the top and the bottom of the box. The midpoint of the box should be clear by the line chart with the support and resistances. You enter when the market breaks clearly out of the box and spends several candles, not 1, 2, 3. You want to be out of the box for like 10 candles, 7 candles, something like that. In this case, we were out of the box for how many candles? The retouch was the 13th candle, right? Is that right? 12th candle was the retouch. These are not signal candles. So this is not a bearish candle. This is not a bearish candle. This is a bearish candle on the edge of the box. That's a signal, right? So there you have it. So that's thing number 1. And I know that's in the book, but I want to talk about some other ones here. Another strategy would be to trade what's called, let's see if we can find one right now, actually. Well, another one would be to trade what's called the old lighthouse. And actually, right now, if we're looking at the 1-hour chart, you might have a... yeah, this is a bit, to me, this is a bearish flag, and it's going to fall and go lower, just like the pound and the pound Swiss. But we can talk about that when we get to the live charts. Let's not look at that right now. Let's go over to let's go to Forex Tester, actually. Why not? And have a look. Thomas, welcome aboard. So what we're going to do is we're going to trade the looks like the euro yen. Okay, cool. So I want to show you pretty cool. Actually, I mean, we can trade whatever ones pop up, but I want to show you, really what I want to show you, see if I can find one here, is the lighthouse breakout and the squeeze play and the channel breakout, channel 33. I want to show you a couple of interesting ones here that you may not have seen before. Let's see. Okay, so here's one right here. Although, boy, that would have been a tricky one. This is actually a really tricky one. Let's not use that as the, let's use this one. Okay, so for the channel breakout, the rules are as follows. What I need to have is at least 2 touches on my channel, and I really kind of want to see the channel pretty parallel, right? I want to see the lines pretty parallel. I'm not going to use my pitchfork tool or anything like that. I'm just saying, like, they should be fairly parallel. Like I don't want to. This is not a channel. If something looks like this, that's not a channel, right? That's like a wedge. And we can talk about wedges and squeeze plays in a minute, but your channel should look something like this, right? So the key to the channel is to qualify what is a real breakout. If you don't want to trade the retouch a la Last Kiss of the channel, what else can you do? Well, you could just wait. You could just have an order, like a standing order below the channel for a sell or above the channel for a buy, or maybe you have a bias and you're only going to go one way for one reason or another. Maybe you look at the open position ratios of traders like I do. Maybe, hey, Israel, maybe you look at, moving averages or you have some sort of trend indicator and you just have a bias. But what I'm saying is there's actually a really cool rule that you can use, and I don't know anyone that talks about this. So if you have from one side of the channel to the other, that is 141 pips, right? 141 pips. All right, great. What's a third of that? Well, I'm glad you asked. That up. Third of, it's not 30, right? It's, is it 33? No, something like that. So 140 pips divided by 3, 46. Cool. So 46 pips. So if this Euro 6-hour chart breaks 46 pips, I'm in, okay? So as soon as the market starts inching its, well, where are we here? Here we are. As soon as it starts inching its way outside of this channel, I have to start the clock and say, is it, has it gone 46 pips? 20, 46 right here would be the buy, okay? So the buy is right here, somewhere around there. And the length of the channel, as we know, is 141, right? So what we want to do, or 140 or whatever, so what we want to do is now go for the rest of it. So 40, if it's 46 pips, then I'm going to make 90, 93 or something like that on this breakout. I put my stop loss. I can put my stop loss down here, back inside the channel, right? Or I can put it below the swing low, either way. And so now I go long, and it easily goes, actually. It goes more than the size of the channel. So the rules are as follows. You want to find a channel. It's actually even better if you have like a bullish flag or a bearish flag, because you have a clear direction. And like I hinted at before, we do have a clear direction on the pound and the pound Swissy right now. And both of those could offer trades basically as I'm speaking right now, but we'll see when we get to the end of this webinar. But let's talk about just in general what I would do here. And this is how I go, well, is the market going, do I have a bias? If the answer is no, then I actually need to wait for the breakout. But if I have a bias, I kind of know where I want to get in. The thing about channels, though, is, they keep going down like trend lines. It's not a horizontal level, so you don't actually know where the entry is until you're pretty clear. Like once it did this and then definitely that, you start thinking, okay, maybe, and then this, you're like, okay, it's going to go, maybe. It's going to break. We've spent 3 candles banging our head against the top of the channel. Maybe it's going to break, and it did. And so then you get in here with 40, whatever it was, 46 pips. And so it's got another 94 to go because I'm going to go for the full breakout. So if the distance of the channel is 140 pips, I expect it to go 140 pips, right? And it did. Went up more than it went 140 pips right here, and then it went another 60 pips or whatever, 65 pips, something like that. So that's how that works. And if it goes 33% of the channel, a third of the channel, outside the channel, then it's considered a valid breakout. Does that make sense? I don't want to belabor the point, but I want to just be really, let's take some trades. Let's just do that. And the other one I want to share with you, or a couple of other ones, if we can get to them, is the Lighthouse. Let's see if I can find one for you so you get a good example. Okay, here's one. So Lighthouse has rocks down here. Cool. Israel's all good? All good. Awesome. Lighthouse has rocks right here. Then you've got your lighthouse. Then you got your light. Okay. Here are the rocks. The rocks are actually quite important, as my friend Rima explained to me. Because I was testing this, and then he's like, no, I trade it. It's got to have the rock. I was calling it the highbrow, and he was calling it the lighthouse. And I like his name better. We have the rocks right here. Then you have the big old lighthouse. This is a bearish one, obviously. You could flip it around and have a bullish one. Then you got the light. And then you put your sell stop below the light or the lighthouse, whichever one is lower. It triggers, and then you're off to the races. Now, again, I love trailing exits because a trailing exit is basically telling the market, hey, market, you can go as far as you want. Give me as much profit as you want. As soon as you start introducing targets, you're canceling. You're not allowing the market to keep going, and you're cutting off the profit that you're willing to take. So I kind of don't like the idea of that, but whatever. So now, actually, let's do that. Let's see if we can trade some of these. All right, let's go. Where are we? Okay. So let's start this bad boy up. On the 6-hour euro yen here, and I don't know what year this is. 2011 looks like. Okay. 2011. Okay. What we want is like a breakout or something. Upside or downside breakout. So we know that we have like resistance up here. We got some support that's come in around here and resistance, and we got some support down here. So basically we're on support right now, right? Those are the critical levels now. It's either going to bounce here or break out and probably retouch it. Breakout, okay. Okay, this is good. This is, okay. So we have some consolidation up here. Got 1, 2, 3, 4, 5, 6, 7, 8 candles that basically go nowhere. They're all on top of each other. Then we get a lighthouse. Then we get a light. So I'm going to put my sell stop below the lighthouse. I'm going to risk 2%. The great thing about Forex Tester 4 is it allows you to do that. You don't have to get a plugin for that. You can just let it calculate the risk for you. You know, the lot size for you. You don't have to do that. And then boom. Let's see, bad boy. Give it to me. Are you gonna go lower or not? Yes. Yes, yes, yes. All right. So now what if we use like let's use a 3-bar exit on this sucker. So 1, 2, 3. So I'd leave the stop where it is, and then now I would move it to this candle, which is really kind of about where it was anyway. And then now I can move it down to above this candle high because that's the highest high of the last 3. And then now, whoa, this is awesome. This is why I love trailing exits. And then now we might get stopped out. Yep, okay. Yep. So you can see that was game over, right? Yeah. All right. No big deal. Okay, let's do another one here. Now this is looking like a potential channel. So let's keep an eye on this and see if it actually works out to be a channel. If it does, we kind of need another touch up here to make this a channel. So maybe we can use the channel 33 breakout. All right. What I'm going to do here, friends, is I am going to count or sort of guesstimate the size of the channel. Markets aren't perfect, but this looks like roughly 167 pips of channel. All right, so 167 pips divided by 3 is 55 pippies. Now, did it go 55 pippies? Sure did. So this would be a sell right here, right now, and my stop loss, I'm going to put it above this little candle right there. Okay, so I'm going to sell. I'm going to risk 2% once again. If you have any questions, let me know. And then I'll put the stop loss up there, right about there. See how this one works out. Oh, we we said it was 167. So the target has to be 167 from breakout. So basically right here. 103.98. So we should have put that in. You can use a trailing exit too, especially, I mean, this is a bearish trend. This is awesome, but I'm going to just go with this exit for you guys here. What was that number again? 167 was down here. What was it again? 103.98. Okay. How about that? Go. All right, let's see if it gets there or not. Yes, easily. Easily. And you can split it too. You could go for the channel size exit, which, you know, it's going to be better than 1-to-1, but it's not often going to be 2-to-1. So it's going to be a little bit better most of the time for, you know, better than 1-to-1, but not 2-to-1. So then if I'm using a trailing exit, my 3-bar exit would be right here above this candle. I'd still be in to be above this candle. Then I would have been stopped out right there. So the 3-bar exit wouldn't have made a whole lot. In fact, very little. Hopefully that makes sense. All right, let's see if we can get the other ones. This probably on a lower time frame. This would be a box consolidation, not on the 6-hour, and maybe we would get a last kiss. I'm not sure. You can see this box right here, guys, what I'm talking about? I'm not sure if that... it closed back in the box anyway. Here's another potential channel. Let's have a look. Let's see what this looks like. A little bit steep. I don't like them that steep. I kind of like them, you know, fairly... oh, yeah, come on. All right. 1, 2, 1, 2. Okay, so this channel distance is 223. 223 divided by 3 equals 74. So 74. Did it go 74? I don't think so. Yeah, it did. Holy crap-oli. Okay. And we need to go another 150. All right, so I will put a sell stop below. Really, I should put it down here. I don't really want to put too much risk on here. That's the problem. Okay, this is what I'm going to do. I'm going to put my sell stop. Okay, I'll put my sell stop below here, and I'll put my stop loss up here between this candle and this candle. All right. So here we go. Sell stop right here. Stop loss is not going to be above this swing high, and it's not going to be right on the thing. It's going to be kind of in the middle right there. Okay? Now, the take profit has to be 94. $130. It's going to be 130. Which is right here. It's got to be up a little bit more. Right around there. Cool. All right, so that is my sell stop. Let's see if this is triggered. It is. We're in. Oh, yeah, money shot. How about that? Why 6-hour time frame? No reason, Jaime. I just had it on here. There's really no reason at all. So, I trade 12-hour, 8-hour, 6-hour, 4-hour, 2-hour, daily, 2-day, weekly. In some ways, the daily would work better, but 6 hour just, is better than 4 hour, I guess. I don't really like the 4 hour as much as I like the 6 hour. If I had a trailing exit on this one, it would be 3-bar exit would be in right now, still in, and then stopped out right there. Would have been slightly better. The 3-bar exit would have been worth approximately like 9 or 7 more pips than the profit target. So if you're thinking about it in pure terms, from your entry to the trend line of the channel is a third of the distance of the channel, right? Between the two trend lines in the channel. And then you get another 2/3 here. But the issue is that's only a 2R trade if your stop loss is right on the channel. I don't like to do that. That's going to reduce risk to reward on this. However, it's also going to improve, the win rate, basically. As you know, most trading is a balance between win rate and rewarded risk. So you can get a brilliant rewarded risk on a 37% win rate, and you can get a really poor rewarded risk on an 80% win rate. So yeah. All right. So let's keep going here. Any loss happening? No. It's kind of like one. The problem is the lighthouse is like a 12-hour lighthouse. The rocks are down here. This is the 12-hour lighthouse, so I'm not going to take it. That would have been, technically that would have been it would have been, the buy stop would have been above this candle right here, so it would have been triggered over here if you had waited that long. Probably wouldn't have waited that long. Another one here. Again, if you have these 2 6-hour candles, you got a nice lighthouse. You got a half of a light there, but we never trigger it anyway. It goes all the way down here, so I wouldn't take that one. Now, there's another one. Got a couple of rocks down here. Just 2. It'd be nice to have 3 or 4, but you got 2 rocks. So look at this one. Let's do this one. This is a lighthouse right here. So up here, stop loss in the middle of the candle. Okay. Let's use the trailing exit and see if this sucker is going to rip off a trade. Yes, and stopped out. So that's over. Interesting. Let's see what's happening with this. This is a little bit weird. Like you could draw a channel here, I suppose, but it's kind of weird to ignore this stuff down here. So that's not something I would normally do. You could kind of squint your eyes and call this some sort of channel here, something like, I don't know, something like that maybe? Not sure. I'm not sure about that. So you'd want to break out. Let's see here. Yep. So let's see here. The distance from one edge of the channel to the other. Then we can move on to another one if you want, guys. I'll look at another system. 313. So we'll go 103. 103 it needs to get out. Okay, so it's got to get out of this channel 103 pips. And so far, we've only been out of this channel, whatever that is. Is that really that much? Yeah. So 103 pips is a third. It's been out 60 or so. Back in. Now it's going sideways. Okay. I wouldn't mess with it now. It's out of the channel, but it's not really going anywhere, so I would not take a trade here. Okay. Not sure what's going on here. See if we can get another channel. or a lighthouse. Or we can move on to another strategy. Here you go. Here's a lighthouse. It'd be better if this was an uptrend. This is actually making lower lows and lower highs. So this should be very early days if this turned out to be an uptrend. However, it's got all the, all the pieces here, and it's probably got a pretty fair shot to get up to at least here. So let's see what happens. I'm going to put my buy stop above the lighthouse, stop loss down here, and let's see if it goes. Yep. And no, we're going to get, doesn't look good. Doesn't look good. No. Once it did this, chances are it's not going to break through this floor over here. See, it had a hard time. Unless this was the beginning of a really strong trend, that was a hard one to deal with. Looks like we might have a channel here. Let's have a look. Maybe something like this. And something like that. Right? It's pretty good. Are we going to go or are we going to stay? What's going on here? Here we go. All right. So what's the distance of this channel? It is roughly 108 pips. So my math is correct. About 35 or something. Yeah. Yeah, about 35. So did it fall 35 pips on this 6-hour candle here? Let's see. No, it went about 19. No, that might be 35 pips. That's going to be it, I think. Yep, that's going to be it. So I put my sell stop here, below that bearish candle. My stop loss up here. And remember, it needs to go, what was that, 108, I think? Take profit is going to be another 70 from here. Down there. Let's see if this triggers. Yes, and yes. Boom. And we have another, that was also a lighthouse, actually. So these were the rocks here. This was the lighthouse. That was a light, but I know it already went, so I'm not going to take it. A bit, that's cheating, right? But yeah, that was definitely a lighthouse. Actually, this was another trade I should have mentioned. This is the other one I wanted to share with you guys. So there was I don't know if you can see this, but I'll highlight it for you. There was actually a squeeze play here. So this is one of my favorite trades. So see, what we have here is we have a support resistance level right here. Now this is not ideal, and so this is kind of why I didn't see this, because I would rather that the market on a squeeze play. I can show you actually one on the live markets if you want to see. Here, I'll show you look on the Euro Swissy. It hasn't broken, but it's been sitting there for ages. This is what a squeeze play looks like. It's like, this is textbook, or almost textbook. Not quite perfect, but very close. So squeeze play is where you have lower highs or higher lows or whatever, but lower highs, and then you have a really nice, strong support level or resistance level holding it. And so what we would be looking for here is just like the channel breakout, or just like the last kiss. Once it trades lower, this is the daily Euro Swiss, by the way. Once it trades lower and then comes back up, boom, and hits it, that's a sell. Or I can wait for it to trade, a pretty hefty amount outside of this. Like I go, okay, well, from here to here, I know it's not like a channel. I go, it's 70 pips. If it goes 25 pips out of there, it's gone. It's going, and I'm gonna let that one ride. Really one of my favorite ways to trade a trend continuation pattern, which is what that is. All right, let's go back to these trading charts are fun. So that was one right there where it actually broke in. And see how it made that big candle? So you had a squeeze play, you had a channel 33 breakout, and you had a lighthouse kind of all in the same area there. Really interesting. That was a very interesting market there. Really interesting stuff. Let's see. That was actually another. Here's your rocks. Here's your lighthouse. Here's your light, but I missed it. There's another one. That was another trend continuation. Let me go to another. Here's another lighthouse, but that's a 12-hour because not really because then this would have been one rock. So no, that wasn't one. There's one. Actually, we can take this one because it hasn't broken yet. So buy stop loss. Probably going to go at least up here. My target up there. See if it triggers. Yep. Go, yay. Kangaroo tailed right into resistance. Funny that. So there you have it. There is another lighthouse. So I want to show you another one here. I want to see if I can stick the, let's try a different, does anyone want to use a different currency pair? Like any of the ones here, strike your fancy. Euro pound, Euro Kiwi, Euro, pound Aussie, pound CAD, pound Swiss, pound yen, pound New Zealand, pound Singapore, pound New Zealand CAD, New Zealand Swiss, New Zealand yen, New Zealand loonie, Swissy, yen, silver, gold, or euro. Any of these strike your fancy? Because we can certainly use them if anyone wants to. I don't want to be accused of cherry picking trades or anything like that. Any ideas? I think the pound CAD seems kind of fun. Let's go ahead and put on the blue-gray daily chart pound CAD. Oh, this is a wild and woolly chart. Okay, let's do that. So I am going to. So what this is it's just an indicator that flags like it just flags different patterns, and I'm just gonna look. It's just gonna flag inside candles. Okay. Oh, we gotta change the background. I can't see the stars. 1 second. Or I can change the color of the stars. Actually, we do that. Let's do that. Pound CAD. What the heck? It says orange red. It's not orange red. Oh, it's Navajo white. Okay, I see. It's Navajo white. All right, so we'll go blue. How's that? Yeah, okay. What did I do? What did I do? Hold on. Edit. Gold. No. Where's my Navajo white? Okay. Oh. It chose the wrong one. Hold on. Where is this? Okay. What this is supposed to do is flag the inside candles that have the narrowest range of the last four. But it's not, I think this is what we call user error. Come on now. Price action. So no. Yeah, no. Must have changed it to no. 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 Yes. Yes, please show this. Yes. That means yes, please. Okay. Oh, there they are. Okay. I'm going to change the background so that you can see those stars because that ain't going to work. I don't know if that's going to work either. How about we go like a darker gray or something like that? Yeah. There you go. All right. Boy, that's easy on the eyes. We'll do that. All right. Something like that we'll have to do. All right. So what's happens is it prints these stars. Boy, that's crazy. Let's get rid of these. I hate these grids. They drive me nuts. All right. This is slightly better. Okay. So what happens is, okay, so this is one right here. What happens is you get these inside candles. So it's an inside candle, and it's the smallest candle of the last four. So this is Toby Crable, if you've ever heard of him. He wrote an excellent book about really simple patterns. And then he tried to buy all the books out because he didn't want anyone to know what he was doing with his hedge fund. Um, they're kind of hard to find, and it can be a little expensive if you find one of his books. But this is one of his strategies, and I've been testing it recently. And it's really cool, actually, really cool. So I put a sell stop a few pips below, like 5 pips below, stop loss above there. Now I don't want my trade to be triggered in the first 3 hours of the day, which is basically what happened right here. So I wouldn't actually take this one. This would be a no-go. In fact, I would go the other way. So this would be one where I would only go long because I don't like the interbank market, triggering my trade. That's a bad thing for me. So all right, it's not going to go anyway. All right, well it did go, but we might get another signal here. Not so good. Okay, so stopped out. Fine. I wouldn't normally wait that long. I would want it to really kind of go the next day or maybe the next day within 2 candles. Let's see here if we get another one. So what I do is I like to use the trailing exit, the 3-bar trailing exit on these, so it's kind of a tight trailing exit. So let's just make sure that it didn't go in the first 3 candles. It didn't. So I put my buy stop over here above the high there. And I put my stop loss down there below that candle. And yes. And we make sure that we don't get whipsawed out of this one. It gets triggered during Europe. And it comes back a bit during New York. It's looking good. And now we got candle 2 and candle 3. So the stop loss now goes below this candle because that's the lowest candle of the last 3. And now the current candle actually has the lowest candle. Actually, no, I think it's the 3rd candle. And now it's the 2nd candle that has the lowest low of the last 3. And now it's the same one, the 3rd candle. And now we go up here. So this is what's called a very lovely winner, which doesn't happen all the time with this strategy, but this is what makes all the profit for the strategy. Without these, you don't make no money. There you have it. 1, 2, 3. So we got our stop loss below this one. And still at the same candle, the 3rd candle. And now it's on the 2nd candle. The trailing exit moves up below this candle low. Okay, still below this candle low. This is one of those ones you dream of, friends. And looky here. We're going to get stopped out. Boom. Okay. So, how did I know? Well, there was a giant big shadow rearing its ugly head. Okay, so there you have it. So I don't know what that was in terms of R, but we had, let's have a look here. We had 239 pips on 80 pips. So about 3. Almost 3R. Almost 3R on that one. Yeah. Cool. Boy, that was a big inside candle too. You'll notice a lot of them are actually really small. That was actually, but this is kind of a wild pair. All right, guys, I know we're kind of running down to the wire here, so I wanted to give you guys, so let's talk about the breakout trades we talked about today. We talked about the last kiss and how that's so cool that you often don't take a full 1 hour loss. We also talked about the uh, the 33 channel breakout, right? Channel 33 breakout, which was pretty fun, really fun to trade. And then there's the lighthouse, which is that nice little two candle formation, but you also have the rocks there, which is sort of a trend continuation breakout. You can kind of tighten up your stop loss a bit because you're using that small little light candle. And thanks to Rima again for the name of that. One of my trading buddies. He's an awesome trader. He trades with his son. They're great. So yeah, so that was another fun one. And then we talked about channel 33. We talked about the squeeze play, which is a trend line pushing the market up against the horizontal support resistance level. And then finally we talked about the NR4, which is what Toby Crable called it. Narrow range 4, meaning it's the narrowest range, the smallest candle of the last 4, and it's an inside candle. And I like to trade that breakout only if it doesn't break out within the first 3 hours of the day, which would be from 5 to 6, 6 to 7, and 7 to 8 p.m. New York time. I use 5 p.m. close on my charts. So those are the ones we talked about. Now you have those as well. You can use like trailing exits, like the 3-bar exit. You can use targets, like the channel 33 target, or some combination of both. But there you have it. So now let's talk about the live charts, because there's a couple of pairs that I do believe are really getting friendly for possible breakouts. Oh my goodness. Well, would you looky there? So this is the pound Swissy. Now, what's not to like about the pound Swissy? The pound Swissy, you'll notice, has, oh my gosh, let's get rid of all of this hoo-ha. This is crazy. Way too crazy. We don't like this stuff. No. Let's get rid of this stuff. All right, cool. So the nice thing about this is that we know, well, we don't know anything, but I would suggest to you that in all probability, if this pair breaks lower than this floor here, it's going to go quite far, and it's going to go quite far quite easily, and it's probably not going to slow down. The first possible spot where it would slow down would be where these little wicks are right here, which is around 1720, 1.1720. Okay, so it's got a good, whatever that is, 150 pips, 160 pips of like greased lightning free fall. So that would be interesting to see that break. And I'll tell you what, I don't know what the future holds, but this candle is halfway done. And if it looks anything like this in 129 minutes when this candle closes, that for me is a sell. Like, no doubt. So we'll see. And I'll tell you and show you another one that's even better, which is, and by the way, like if you were looking at this on a, let's go to the pound, because the pound is actually going to be slightly better. I'll show you. Where is it? I actually don't normally use these charts. These are charts I just set up for you folks. Because my 8-hour, 12-hour, and 2-day charts, they kind of grind on the CPU. So what I want to do is get rid of all this stuff. Delete, delete, delete. Okay. Now, what we have here is a very similar kind of a setup. This is the pound 4-hour chart. And again, what are we looking at here? Well, it looks like this floor here has been violated, and we're kind of inching our way back up against it, right? Now, there are a few spots here, obviously right here and right here, where you would argue that, well, maybe it's going to get hung up there. But after that, again, it's got a huge fall all the way to here. Like this is open space here between 2160 and 1929. This is a whole lot of open space, which means it's got the potential to move very quickly and really push through those levels. So this to me is definitely worthwhile, especially when I'm looking at the open position ratios, and the open position ratios are telling me that this is a really awesome trade to take. All the retail traders are buying the pound Swiss and the pound right now. So I want to be selling. I want to be in the minority. I want to be those traders who are selling. So both of these look really good, guys. And you could just use a trend line and say, what if it breaks the trend line here and closes below there, I'm going to go. Or if it gives you a trendy kangaroo tail like the pound Swiss was showing, whatever. They both look to me very, very tasty in terms of sells. So I like both of those bad boys. So I just want to share those with you. Are there any charts that you guys want to see? If not, we might have to call it a night or a morning for most of you, I suppose. So yeah, those are the ones that I'm definitely watching closely. It'd be nice to be able to say that I want to go long the pound CAD, or sorry, the Aussie CAD, but I don't. And it's just because we're up against this serious level right here. Boom, bam, bam, boom, boom, bam, blammo, blammo, blammo. So all the numbers and everything suggest breakout. This suggests it's going to break out, but boy, I wouldn't be surprised if it has a little bit of trouble here just because it's such a key level. So we'll see if that can go. Hi, me. You can go to Naked Forex now. I'm on Twitter. Look up Walter Peters. You can find me on there. We have a private forum at Naked Forex now. That's about it. So yeah, thanks, man. Go to YouTube, Jaime. I got hundreds of videos on YouTube. Look up Naked Forex on YouTube. You'll find me on there. Yep. I think the channel is just called Naked Forex. Sweet. Thanks, guys. Hey, you have a wonderful day. Thanks for spending time here at the Naked Trading webinar. Really appreciate your time. I hope you have a wonderful night, day, evening, afternoon, wherever you are. And we'll catch you very soon. Thanks. See ya.